In this DVD, we're going to talk about technical analysis. Jimmy and I have spent a lot of time on technicals, and we know what works and what doesn't. And some things we're going to cover are Fibonacci retracements and extensions. Jimmy, you got some technical stuff too, don't you?
Oh, yeah. I'll be talking about momentum confirmation trades. I'll be showing you how a bank trader looks at momentum, how he figures out how those trades will be confirmed to work. I'll also be showing you some support and resistance system I built up, also from the bank trading side, Ross.
And I'm going to be covering Elliott wave, real-world Elliott wave. Sometimes the wave count isn't what we think, based on the software. But what do you do in those situations? We'll have a look at that. And also the Gartley pattern, we'll cover that as well. So let's talk a little bit about Fibonacci extensions and retracements. Fibonacci, where'd that name come from? Well, it comes from an Italian mathematician from the 13th century. His name is Leonardo Fibonacci. And he came up with a number series. And this number series, when you look at it, there's a ratio between each of the numbers. And this ratio amazingly shows up in the financial markets. Now, we have to ask ourselves, who's the first guy to actually start using these numbers in the financial markets? Maybe you've heard of R.N. Elliott, famous for Elliott wave. He started using Fibonacci numbers in the financial markets with great success. However, a lot of traders, there's all these numbers out there, and a lot of them are using the wrong numbers. For an example, if you look at it, 50%. A lot of people use 50% when they're trading as a retracement. Did you know that that's not even a fib number, Jimmy?
I knew that.
You knew that because
yeah.
I told you that.
I knew that.
And if you look at the slide here, we got the real Fibonacci ratios. We got 38.2, 48.6, 61.8, and 78.6. Those are called internal retracement numbers that we'll use to find support and resistance. If you want to find out more detail as to where these numbers come from, refer to the home study printed materials that we have available.
Yeah, Ross, I can tell you the 78.6. I've been a bank trader my whole life, and I never looked at this. And when I met Ross, he started showing me these Fibonacci numbers, and I can tell you they work fabulously. We put it together, and we've got a great program from these numbers.
Thanks, Jimmy. You know what? When you look at these numbers, they're not all created equal. There's some numbers that work better than others, and as Jimmy mentioned, 78.6 is a great number that you'll see in our technicals. On the screen, we can see that Fibonacci numbers often are very closely related to Gann numbers. Some traders like to use Gann numbers, and they've been successful in using them trading. However, we feel that the Fib numbers are more accurate. We would like to use Gann's techniques. He talked about looking at these different swings in proportion to each other. And using his numbers for extensions and retracements, we've just found that using the Fib numbers is more accurate. Now let's talk a little bit about retracements. So here we have a chart. We have a significant directional move. It's a bullish move first. Now the market's starting to pull back, and we've plotted these lines on the chart to show where there's potentially some support, right? Our assumption is that this is the trend, and it's pulling back, and so where are we going to find support? We're looking at the first number. Is it going to find support there? Well, if you look, no, it just quickly broke through that, and the assumption is the market will go to one Fib number, and if it breaks through, if it just tears through without any hesitation, that Fib number didn't work, and so therefore the assumption is it's going to go to the next Fib number. So in this case, it looks like maybe it's going to go to 48.6. We're not sure. Let's have a look on the next chart. We add a couple more bars. Obviously, 48.6 didn't work either. Now we're looking at 61.8. Maybe it's going to stop there. Let's see what happens. Okay, it looks like it might be bouncing on 61.8. So at this point, we can toss 38.2 and 48.6. We're looking at 61.8. It might find support there. Okay, obviously that's the number where we find support, and this is an example of how Fib retracement lines can be plotted on the chart and show us where we can find support. Okay, Jimmy, let's look at an extension example. If you look at this move here, Sometimes, you know, there's this directional move, it pulls back, we go into this retracement zone, and then it's going to go off and make a new high, and we have to ask ourselves, where is it going to end, right? So what we can do is we can use the fib extension tool. First of all, we measure from here to there. Okay, we look for the retracement. Once the retracement's finished, we will plot or project the ratios from this point here forward. Now in this case, we can see it went up and it hit the 78.6% extension. We'll find in later examples 100% is more typical for these types of extensions. Gann found that the number 1 was very important. Now 100% extension is a very important level of support and resistance. And as we get into the ABC concepts, as we get into Elliott wave, we'll start to realize that we will use this tool to find the end of wave C. We'll learn a little bit about that in our Elliott wave section. Now, once we've just now covered how to find retracements. We plot these retracement lines. Let's just talk a little bit, Jimmy, about Fibonacci price clustering. What that involves is when you plot fib retracements on multiple time frames. So if you look at this chart here, we have an example of a directional move, a bearish move here from there to there. Okay, and that gives us a 38.2 projection. See the red line here? That would be the 38.2% retracement on that red move. Now let's look at the green one. If we measure from here to there, we have another fib projection, the 48.6. Can you see how these two lines are kind of close together? They're kind of clustering together, right? When you see that, it actually increases your chances of the market reversing in these zones. So this is a concept that Gann taught. We want to see these ratios clustering right on top of each other, if at all possible, and on multiple time frames, preferably 2 or 3 time frames. And when you see that, we can expect to find a reversal.
Well, I was going to say, Ross, that the momentum, Jimmy's band system I use looks at static levels, and your system identifies levels where it may stop as well. So putting the two together there is just perfect. We put our both systems together, and we find some great trade opportunities that way.
Yeah, I remember when I met Jimmy, we're in the room there in California, and we're talking about putting the fundamentals and the technicals together. And some of the trades that we come up with really are profound when you don't have to wear one hat or the other. You can actually do both at the same time. Now let's cover Fibonacci price clustering again. From here to there, we got this one move, right? We've plotted the ratios. Now, can you see another low on this chart where we could plot some more ratios? Maybe from here to there. If we did that, we have even more ratios. Can you see how they're starting to cluster together? This zone here, zone. There's like 4 zones. Now, obviously, we can get rid of this zone because it's gone through there, but we're starting to look at this zone. Perhaps we can find some support or resistance there as it moves down. But can you see one other low that we can plot from? Let's have a look. Right here, if we go from here to there, okay, we can get rid of this zone because it's gone through, but we're looking at this. This zone here, there's actually, it looks like there's only 2 lines, but there's actually 3 lines. We plotted on 3 different time frames. We have these 3 fib ratios clustering together, and so we're thinking it's either going to bounce there or it could bounce here perhaps if it rips through that one, right? Let's see what happens here. Okay, so based on these 3 time frames, we've gone from here to there. There's 1, here's 2, there's 3, and now obviously this is where it's kind of in that zone. There's definitely support happening there. However, a trade like this, sometimes we might have a tendency to get in too early. Have you ever done that, Jimmy, where you jump on board too early?
Oh, yeah. Oh, yeah.
Yeah. And so what we want to do is make sure we get in at the right time, because check this out. It took off, right? Obviously, this is support right in this zone. But there's another thing that we can add to our analysis here, and we don't really cover it in the intermediate. It's more an advanced topic, but it's Fibonacci time analysis. I've spent a ton of years of my life on research on this subject, but have a look at this. This is actually looks very similar to what, if you're a Gann trader, maybe you've seen a Gann box before, right? And this is a squaring of price and time. If we look at this move here, okay, maybe we've seen a box that kind of looks like this, and often there's a whole bunch of lines all over it like this, and it just looks incredibly confusing. Your typical Gann box would look like that, but what you want to do is reflect that box into the future and see what kind of results we get from that. In this case, I've cleaned the box up and I've just put a 61.8 price line and a 61.8 timeline. Okay, so what we've done is we've measured this move here, we've counted how many bars that is, and multiplied it times 0.618. And that's what this line is here. This is the vertical line, the timeline, and can you see how it actually reversed? You got a squaring of price and time right there at 61.8, and it takes off right from there. But as I mentioned, that's something that we talk about in our advanced class.